Hello, this is Heidi Gluck with Key Advisors. Welcome to our end of year accounting webinar. I just want to make a quick disclaimer that the information we're providing here is the opinion of Key Advisors. It is not intended to be legal, accounting, or financial advice. Please consult your accounting and tax professionals as you plan for your year-end close. And I will hand off the reins to Bob Ichniowski.
Thanks, Heidi. Good morning, everyone. Today, I just want to talk a little bit about accounting and end-of-year preparation and some of the things that we should be looking at, not just only as accounting, but as an executive team as we prepare for year-end. So we're going to walk through some of the things that we need to talk about. What needs to be done for end of year? Number one, let's start with balance sheet cleanup. Hopefully we have done this during the course of the year and turn it to what I call a pre-close activity, so that every month you are scheduling your balance sheet accounts and distributing them between members of your staff. And that way, when you get to end of year, your balance sheet cleanup will be a lot simpler than if you just wait till the end. Month 13, for those of you that are using month 13 for adjustments, for 2020 and beyond, I would recommend that you do not put your adjustments into month 13. Whatever you have, try to get it in the course of a regular fiscal month, or hold your year open a little longer just to get those final entries in. It'll make your financials much more accurate and streamlined, and there won't be any questions about things that are in month 13. You should have started your budget and planning package at least 60 days prior to year end. That way you can communicate with all the operating departments and your executive team. Accounting is responsible for putting together this package, but communicating and working with all departments so that we have a plan that supports the goals and vision of the company. So why is all this important? So some of the items we're going to discuss are parts, service, used truck, accounting, budgeting and planning. So if we take a look at the parts department for end of year, let's start with physical inventory. So it's not just a parts function. As far as your annual physical inventory, accounting needs to participate, either as auditors, and they will also be part of the reconciliation once the physical inventory is taken. We do this to ensure integrity of our balance sheet. There's quite a lot of money that resides on our balance sheet for parts inventory. So we need to account for that and make sure we have processes in place to ensure process and procedure. So ongoing process and controls, budget and planning are two of the things that we need to consider when doing a physical inventory. If we find that we're lacking in the process area, then we need to create a process together as parts and accounting and roll that out to anyone that touches that process and document it and make it part of our accounting SOP. So we talked about physical inventory. After we take the annual physical, we need to reconcile the physical to the general ledger and accounting. It is a best practice to do this on a monthly basis. So together as a team, if you reconcile on a monthly basis, it'll be a lot cleaner when you get to year end, and will take a lot less time, which converts to a lot less money, cash spent on personnel physically counting and verifying inventory. And then evaluating the inventory results. What happened? Why were we off? And picking up money at physical, it's just as bad as writing it off. It's still an indication of an underlying problem. And then resolving the problems that you find. So where did we drop the ball? And what do we do to correct that and to sustain that moving forward? Again, a lot of communication between parts and accounting on issues that we found. So substantiate your corrective action. The accuracy of the part numbers and quantity that are in stock and on hand are very important. If we don't have the part physically that we say in our inventory system is on hand, if customer A walks through the door and wants to buy it, we can't sell it to them. So that's a lost sale. It hurts our business. It also affects our fill rate of our inventory, which affects demand. So there's a lot of cascading effects of not having an accurate inventory on hand. There's a lot of investment, into our inventory. So we want to ensure integrity of what the owners, dealer principals have spent to stock the inventory. Where can we identify inventory and accounting process breakdowns? Start from A to Z. Right down to how do we receive a part? Through selling the part, creating receivable, and collecting that cash. If we have any breakdowns, together, accounting and parts should rewrite a process, communicate it to both teams, and move forward with that process change. So establishing the process to correct issues going forward is very critical. We don't want to repeat the same mistakes. So we talked about physical inventory. Preparation for physical inventory, that just doesn't mean maybe pre-counting some items, organizing your warehouse, sending back your dirty cores. You need to do all that, but it also means you should have a documented cycle count procedure in place to turn your inventory at least 4 times annually and 12 times annually for fast movers. This will clean out any issues that you have during the course of the year, and again, make the process seamless. Upon taking the physical inventory, we will take a look at the adjustments that came out of it, communicate those results to upper management, your executive team, and anyone in the organization that needs to understand what happened. Post-inventory, we should have a clean slate to start with. You should make any adjusting journal entries in accounting for the physical. You can make them in the last fiscal month of your year. I do not advocate putting them into month 13, but book them in the final month of your year. You need to hold the books open a couple weeks. So, improving for 2020. Number 1, let's put some inventory integrity back into the balance sheet. And as far as parts goes, just a few other things to consider. Just make sure that anything that you do is communicated, and that way we can hold people accountable. Developing a SOP for parts and for accounting and integration of some of the duties that overlap is a great way to control your inventories. So moving on, if we look at the service department, let's talk about what needs to be done for year end. Again, why is this important? There's some items that we're going to discuss: WIP cleanup, warranty cleanup, ongoing processes, budget and planning. By WIP cleanup, I'm talking about old repair orders that are sitting out there. We all have them, but let's try to keep them to the minimum. Repair orders that sit out there, keep in mind, we've already paid the payroll for the technician to work the job. We've already paid for the parts that are sitting on the tickets. So we're out of pocket for all this cash and have not closed the RO, nor created a receivable, nor collected our cash. So it's very important, both from customer pay and for warranty, to make sure that we have an accurate and up-to-date working process. On the warranty side, you need to be very timely with closing of the tickets, because if you're not, number one, at some point you're not going to get paid. So you want to be very proactive with warranty, right down to having weekly warranty meetings with accounting to discuss any issues, review warranty schedules, and clean up any open items. If we need to change process or review ongoing processes, that should be a joint effort between service and accounting, and document what we find to enhance the process. It is part of the service SOP and should be built into the accounting SOP. By SOP, I mean standard operating procedure. Again, budget and planning. How does what we're doing here tie into the vision of the company and where we're going from there? So let's talk about work in process for a minute. Work in process should be reconciled monthly. You should have a GL account on your balance sheet for work in process inventory. So there's a reconciliation process between what's carried in WIP on the service side and what's carried in accounting. If you're not doing this monthly, you need to start. If you don't know how to do it or how it's reconciled, feel free to reach out to myself or anyone at Key Advisors, and we'd be happy to assist you with that. Overage warranty. Warranty should be a scheduled account on your balance sheet and should be reviewed weekly. Adjustments should be sent to accounting weekly to be proactive and stay on top of that. Once warranty hits a certain period, if you submit beyond that point, most likely the claim will be rejected and/or you will not get paid. So ask yourself the questions why, when you're looking at schedules such as the warranty schedule. If you go back to the 5 whys, if you ask why 5 times, you will come to the answer. Why are they open? Why are they not collectible? And so forth. So for improving for 2020, sometimes you just need to do a felt tip review. And by that, I mean, print out the warranty schedules by location, take a pen, circle all the ones that are past due, sit down and have a discussion as a team, as an accounting team, as a service team, and also as a parts team, because parts has a piece of this as far as warranty parts and warranty cores that will be returned back to the OEM. Daily hours management and service is very critical. You need to balance time daily. By that, I mean, if a technician is paid for 8 hours during the course of the day, we need to be able to account for his 8 hours and how they were clocked on a ticket. If he only has 6 hours on a ticket, what did he do for the other 2? If you wait a week or 2 and try to balance your time, you will never figure out what the technician did. It will become an issue. It will become part of your WIP adjustment at the end of the month, and you will be spending a lot of time trying to backtrack and figure out how to reconcile. Live warranty coding. We do not need to wait to code for warranty until the repair order is open. When you get your estimate, if it's a warranty repair, pull your op codes, build the estimate, open the RO in WIP, and preload the labor. By that, I mean, if it's a warranty job, say for a turbo, it pays 10 hours, make sure that before the technician makes that first punch, that those 10 hours are loaded into WIP on that warranty RO, so the technician is very clear of the expectations of the job. Otherwise, they just work and we try to add hours later or reconcile, and that's just not a seamless process. Timely closing of ROs. We fix trucks every day. A lot of dealerships, we all do it, have a turbo close. Last 5 days of the month, 70% of the work's done is closed. We need to start closing tickets on a daily, weekly basis, fluidly throughout the month. Number one, if you do that, you're cleaning your WIP. Number two, you're creating a receivable to collect your cash quicker. And number three, you will have a lot less open items at the end of the year as you're prepping for year-end activities. So if we move over to used trucks and what we need to do for year-end preparation here, number one, take a physical inventory. Treat it as a part. Reassess your investment positions. Stock what sells. What I mean by your investment position. You need to touch all the trucks. Make sure that the truck's physically on the lot. And then reassess our strategic position. I mean, what are we trying to accomplish with the used truck department as far as sales and gross profit goals? We need to define that. And then again, we need to have used truck tied into the budget and planning process and vision of the company. So set goals. Goals are good. Physical inventory. Again, just like the parts department, we should take a physical inventory, verify possession and location of the vehicle. That's the responsibility of the used truck manager. It's also a responsibility of accounting too. Run your used truck inventory schedule, work with your used truck manager, and make sure that what is on your balance sheet, both quantity and value, matches to what's on the lot. Verify components, miles, engine hours, and make sure that they also match your inventory data. Ensure that the unit is in good working condition. We don't want a customer come in to buy a unit and we go out to start it and it doesn't start. So now this is prep for used truck department, but accounting again holds the value of these units on the balance sheet, and that's very important. You might have a unit that has issues that we weren't aware of that you might want to make a year-end adjustment for and write the value of that unit down in your inventory and take the hit in the current year. Make sure that units are available for both sale internally and externally. So what type of marketing are we doing to make sure that units are moving? We do not want overage units. They do not get better with time when it comes to used trucks. Record the vehicle information and specs in the business system. That's your DMS, whatever you may be using, and also part of that DMS is your CRM. That way the information on what's in stock is available to everybody that's using your business system, and having more visibility creates more opportunity for sale. Everyone should be selling the entire dealership. New and used truck salesmen, if they can't sell a truck, sell a part, sell a service, sell a PM. Same thing with parts and service. Everyone needs to cross-functionally sell your dealership. Best practice is to cycle count used truck inventory. So get your eyes on at least 10% of your trucks once a month. Depending on the volume and what's sitting on the lot, I would try to put your eyes on at least 30 to 50% of the units, but at least 10% is the goal. Again, reassess your investment positions, treat it like parts, stock what sells. There's a lot of money that's invested into the used truck inventory, so we need to make sure that we carry the right inventory. Mistakes do happen. Trucks should be bought and sold in the same market in your AOR. Once you start going outside of your market, you tend to end up with overage inventory. And the goal is to increase market penetration. So let's try to stay within that zone and focus on units that are older than 90 to 120 days. If the unit's still in stock at 120 days, a used truck, it's not getting any better. We call it a hard turn. So at 120 days, if it's not sold and there's no activity, you should be looking to take the unit to auction or wholesale it off. Back to accounting for year-end preparation, account reconciliations. This is very important that every account on your balance sheet is scheduled and reconciled on a monthly basis. Doing this will facilitate a much smoother process at year-end. Take the accounts and split them up between the members of your accounting staff. So if you have a staff of 5 to 10, assign anywhere from 3 to 6 accounts per person, and you will cover most of your balance sheet. Make sure that the process is documented on who's doing what and how the accounts are reconciled. Identify the whys that come out of the reconciliation and build corrective actions when we have discrepancies. For example, if you're doing the account reconciliation on the parts physical inventory to the general ledger and it is always off, we need to ask why. We need to have those conversations with the parts department and then build corrective actions to make sure the reconciliation process with accounting is smooth. End of year preparation, budgeting and marketing. Zero-based budget for all expenses. So what I'm talking about here is a focused approach on expenses. I like to take and assign 3 expenses to each departmental manager: parts, service, new, used, and accounting. People can focus on 3 expenses. So set a goal for the year. For service, for example, we're going to reduce policy expense by 10%. People can focus on 3 expenses, not 23. If you give them too much, the program will lose focus and will not be successful. So come up with a program that looks at it in small bites and is documented, calculated. Accounting will post to it when they close each month and provide feedback to all the operating departments on expense control. What is the gross profit needed to attain the goals of the budget and planning packages that we talked about? So while your sales may fall short by department, at the end of the day, it's about total gross. Gross is cash. We can spend gross. So we need to raise grosses if we're behind on the revenue section. Perform a customer market analysis. What markets do we need to be in? What customers are we trying to conquest? So we should have a conquest list by department. Who are we going after as far as new trucks, used trucks, part sales, service work? So what accounts have we lost? What are we doing to regain those accounts? So all part of your market analysis. Pricing analysis. This goes back to your master business plan. What is everybody else around you doing? What are the door rates for service on your competitive dealers that sit around you? What do we sell parts for? So part of year-end prep is taking a look at your market, your pricing, your customer base, your account structure, and making sure that you're set up to do better and at least sustain 10% year-over-year growth. Personnel ins and outs, succession plannings. You have people retiring all the time in dealerships. So what is the plan? If you don't have a plan, make a plan so that you're not caught with someone that either retires or leaves the dealership and you have no one to step in and take control and be that leader. Inventory and receivable forecasting. There's a lot of cash tied up on the balance sheet for accounting in inventory and receivables. So we need to be developing a forecast, and that goes along with a cash flow statement so that we can see our sources and uses of cash. Because a big piece of it is your new and used inventories, your parts inventories, your service whip inventory, and then all the receivables that are out there waiting for collection. I just mentioned cash flow. So if you do not have a cash flow statement, you need to develop one as accounting. A cash flow statement is strictly a change in your balance sheet from period to period. So you can set one up easily. If you do not have one generated out of your DMS automatically, then set one up in Excel and distribute it so everyone understands cash flow, particularly at year end. Year end balances on cash flow need to be analyzed. Idle cash does nothing for the dealership. We need to make our cash work for us. KPMs and KPIs, key performance indicators, these are things we want to get accomplished in the current year and planning for 2020 and beyond. If you do not have a strategic planning process, it's very important that you develop one and define what your KPIs are. They also involve key activities to be performed during the course of the year by each department. Compensation. Maybe the way some of your plans are written, aren't pay per performance, because that's what we're looking at in today's environment. Our pay per performance plan to drive sales and gross, through the dealership. When we get to improving profit, there's lots of ways to improve your profit, but from an accounting viewpoint and looking at your year end and everything that you go through, reduce your asset base, right size your company. So if we have the right inventory, new, used, parts, labor, when it's needed, we don't allow it to get old, we control our receivables and don't let them age, we will be in a lot better shape. Evaluating existing customers. Are they profitable to the dealership? Are they profitable enough? I don't know. That's analysis you want to run through. If not, why are they not? And how can we improve? Control expenses and which ones. So thank you for your time today. If there are any questions, I will take them now. You can also reach out to me. My information is right here on the screen. I am Bob at keyadvisors.com, and I thank you for your time today.
Thank you, Bob.
Thanks, Heidi. Are we good?